My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, folks, welcome back. Today's zooming in from beautiful Texas, originally usually from Austin, but today he's in Houston. We've got Jeff Albaum, who is a real estate entrepreneur. He's done a lot of different stuff. He's done short-term rentals, long-term rentals. He's raised some money for a fund. These days, he's focusing on doing small multifamily BRRRRs. So that's what we're going to take a look at here today with Jeff. Welcome to the show. Great to have you.
Thanks so much for having me, Dave. Excited to be here.
So Jeff, tell us a little bit about what does real estate investing look like for you today? We're wrapping up 2024. We're heading into 2025. What do you do? What kind of volume of deals are you doing? What are you focusing on these days?
Yeah, it's pretty short and sweet. So right now, my main and primary focus is rehabbing a 7-unit in the Midwest. So it's a 7-unit multifamily. It's all residential, and bought it in February of 2024, and looking to just do a value add multifamily deal. So try to do a pretty big rehab on it, raise rents across the board, and then refinance out and hopefully take out more money than I put in.
Sounds like a good bird to me.
If in theory, I'll let you know how it goes.
So are you working on just the one deal right now? Do you have some other properties in the portfolio, or is this your singular focus at the moment?
Yeah, have some other properties in the portfolio, but they're less active. So not really a ton of rehabs going on. Those are just they're mostly stabilized, a couple of maintenance issues here and there. But the 7-unit is what my primary focus is on.
So the other ones in the portfolio, single family homes, multifamily properties, what do you got? What are you holding on to?
Ranges from single family homes up to the biggest unit besides that is a fourplex, also in
Mhm.
the Midwest. And so kind of a lot of my sweet spot is in that smaller multifamily range. So one, two, threes, and fours.
Yeah. So you're doing a lot of stuff in the Midwest. You're based in Austin. Are you managing teams from afar? Are you jumping on a plane, flying out there, doing stuff yourself? How does that work?
Yeah. So weirdly enough, I've never actually seen a piece of real estate that I own. I think probably lessons learned, would not recommend that going forward. It sounds cool, but a lot of
Well, yeah,
times
everybody
it's
likes the remote investing idea, or
right.
the virtual investing, I think they call it. Yeah.
I think it can work. I think you definitely need to get out there and get eyes on the property at least once. It doesn't have to be
Yeah.
before you buy it, but during the rehab, I think it's beneficial to do so.
Okay, so you got this right now. We're almost Thanksgiving of 2024. You got this back in February. Walk us through the deal. So how did you find the 7-unit?
The 7-unit was found through my property manager, actually. So have an
Okay.
amazing property management team in place, and cannot recommend them enough. They've been amazing.
Hmm.
And every now and then they would send out pocket listings. They say, hey, we have clients who are interested in selling. These are kind of a high level overview of the details. If you're interested, let me know. And so I was looking to I really wanted to get into something above 5 units. So do an actual commercial multifamily deal.
Yep.
Um, and that came across. It was a 7-unit. It was in the price that I was looking at getting into. It was the largest building I've ever bought, but not the most expensive. So I felt like it was a good kind of stretch where I was going to be able to learn a lot and sink my teeth into something new and challenging. But if all went south, it wouldn't bankrupt me.
It
It
wouldn't
was
sink you. Yeah. So
exactly.
paint us a picture of what the property was kind of like when you bought it. What was, did you purchase it like traditionally? Did you get owner financing? Did you self-finance the down payment? What did that look like?
Yeah, totally. So the deal when I was first looking at it, so 7 units, six of them were rented. And basically, what I liked about it was if I used traditional financing, which I did, so 20% down, and then bank loan, 80% LTV. Um, if I used traditional financing, the property covered itself basically from day one. So it
Mhm.
wasn't cash flowing, but it wasn't losing money. And I really liked that because I didn't know exactly what my rehab timeline was going to be. I've done, a fair amount of rehabs in the past, but they've all been 1 unit of a duplex, let's say,
Yeah.
or 1 unit of a triplex. So I hadn't done a full renovation of a building. So I was like, oh, maybe I'll extend it and do one unit at a time, get it rented, and then let the others basically pay for the mortgage.
Yeah.
Um, I think that was the idea. Looking back, again, lessons learned. I probably wouldn't do that again.
Why not?
Um,
Like, it sounds like a logical idea. Why? What was the
it,
problem with that?
it does. Well, so my goal was always to increase the property's net operating income or NOI, and then do a cash out refinance.
Yeah, do
So,
a BRRR. Got it.
do a
Yeah.
BRRRR, exactly. So that's kind of the whole goal of this. And I'm really calling it a BRRRR, maybe 202 level course. I'm basically
Yeah.
calling it, this is my BRRRR education. I'm not really expecting to knock it out of the park. This one, I want to make all the mistakes on this kind of smaller deal in the grand scheme of things, and take those learnings and then go do it again for real, and on a bigger deal. So the goal was to refinance. And so why I say I would have done it differently is because I'm doing it one at a time, it doesn't get me to that refinance goal very
Mm.
quickly.
Yeah, it's just going to take a lot longer. That's all.
It's
Yeah.
gonna take a lot longer.
So lessons learned, if you were to make an offer on that same property again, would you be trying to get it vacant or more vacant, or what would the conditions be?
Yeah, conditions would be so high level over what I do differently.
Yeah.
Uh, for sure would go out there and see it personally, see it in person, and get
Mm.
an understanding of which units need what. Because I think
So what I'm hearing between the lines there is there was a hell of a lot more work than you thought it was going to be. Yes.
would you believe it if I said that construction is going to take longer and be more expensive?
I have funny. I've
You've
heard
never
that.
heard that.
Yeah, yeah.
So yeah, I would definitely head out there in person, see it myself, and get a very clear scope of work for each unit. Um, because the property management team that I have in place is, again, they're amazing, and they do a lot of the project management, overseeing, contractors getting in there on a daily basis, et cetera. But I like to be involved and understand what's going on as the owner. And sometimes I'll
Plus,
talk to a
they're not cutting the
contractor.
checks. You are.
Exactly.
Yeah,
Exactly.
yeah.
So, when they get on the phone and they're like, oh, I want to do da 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 in unit two, you know what I mean? Like in the back by the stairs. And I just, in my head, I'm like, man, I have
I have
no
no
idea what you're
idea.
talking about. So that's a real world scenario of, oh
Yeah.
shoot, okay, it'd be helpful to see and understand what's going on.
Yeah. Okay. Very good. So you bought it in February. It had one vacancy. So I imagine you guys renovated that unit. Did that go fairly well? And were you able to get a significantly higher rent than some of the other units that are currently occupied?
Yeah, yeah. So it did. The rents that were in place when I bought it were significantly below market to begin with. And in theory, we could have raised them to market rents, from day one, but
Hmm.
I really wanted to spend the time and money to do a rehab and make the units a bit nicer. The building itself, I probably rated as like a high class C, but low class B maybe. But it's in a
Mhm.
really amazing location. It's very close to the downtown of a metropolitan area, and the location is pretty up and coming. So I wanted to spend the time and money up front to make it nice. I wanted to
Mhm.
kind of command market or slightly above market rents. Um, so that's what we're going for.
Yeah. All right. So we're 9 or 10 months in on this project. How many units have been turned over?
Four of
Oh, that's
seven.
pretty good. That's not bad,
Pretty
man. Yeah.
pretty good. Yeah, it's
So
again.
was that tenant turnover, or you've kind of
Yep.
renovicted people, or what's happened there?
No, is all tenant turnover. So
Okay.
the three remaining units currently have tenants in them, and so their leases end over the next 2 to 3 months, and then we'll be able to get in there and do the same thing. And so
Oh,
we're
okay.
we're going to offer each of those three, uh, you know, first dibs basically at the newly renovated units. So that would be nice if we can keep existing tenants in place.
So the other units that you've got renovated, they're not rented out yet. They're vacant at the moment.
Correct. Yeah, they're
Okay.
listed. So if you know anyone in the Midwest looking for an apartment,
Midwest is kind of big, man.
yeah. This particular property is in the Cincinnati market. So
Okay,
Cincinnati,
Cincinnati.
northern Kentucky.
All right, very good. Excellent. Okay, so yeah, lessons learned. So basically, it sounds like it's going to take you a little bit longer, but is it looking promising as far as like increasing the NOI? And you've got vacancies. So what is the market like these days in Cincinnati? Are there a lot of vacancies? Is it hard to fill these units up, or what's going on?
I don't know if it's necessarily the market specific. I think the time of the year we're in, as we're filming, it's late November, early December. I think
Yeah.
people are less likely to move in the colder months.
Yeah.
So that's another lesson learned is thinking about, okay, when are we going to finish this rehab to be able to list it in the first place? Is that going to be in the cold months or the hot months? And
Yeah.
trying to make it more so along, somewhere in the summer.
Yeah. So I imagine you're having to subsidize this property for a while until you get it rented out.
Correct.
Yeah.
So that was one of the things that I think I did well was keeping a very, very large reserve in
Mhm.
cash before I bought it. So not taking the entire amount of cash I wanted to play with and use as a down payment, but using a very small percentage of that and keeping a lot in reserves, keeping a lot in the construction budget, whatever the construction budget was, keeping about 25% more than what that was. And so I've been very lucky that I was, pretty well capitalized on the front end because that would have been a big issue if I was expecting to turn this thing by now and I didn't.
Well, I don't know if that's luck or not. That's just good foresight on your part. So hats off to you. That's thinking ahead. I think you've got an engineering background, so that's that analytical mind and the number crunching coming in. It's as like me would just kind of charge it and go, "Hey, we'll figure it out."
Well, two things can be true at once, I guess.
All right. So, hey, it sounds like maybe it's a little slower, a little bit more expensive. That's lessons learned. But now that you know what you know, what's coming up for the new year? What are you doing for 2025? What are the plans once this one's kind of sewn up?
Yeah, so really excited to see at the end of the day what the refi check looks like because I think, we all know, oh, NOI divided by cap rate equals per like, this is what I can get. And so I'm really curious to see what like I know what the math looks like, but I also know that math doesn't usually equal reality. So I'm really
Yeah.
excited to see, okay, at the end of the day, when all is said and done, what is that refi going to come in at?
Well, so
Um,
so share if you don't mind sharing. What does the math look like in at the moment? So, are you open to sharing that? Like, how much did you pay for it? How
yeah,
much were all the renovations? What's the holding costs? So by the time you are ready to refinance it, what are you all in for? And then what do you think you're going to be able to refi it for?
yeah, for sure. So I bought it for 565.
Mhm.
Um, we'll have put when all is said and done about 150 into it, and that's
Mhm.
using cash and a line of credit from the lender. That was the other thing. I found an amazing lender, and he's been phenomenal. So that really makes the process a lot easier too. So he's allowed me to open a line of credit to use for this project with the understanding that I'll refinance with them in 6 months to a year.
Okay, cool.
Um, so I was able to get exposure to that, which is really exciting. So yeah, when all is said and done, put about 150 into it. So if we use
150
that,
so far, but by the time you're done and you're ready
no,
for refi, that will be all in.
that will be all in.
Got it.
Correct.
Okay. So
Correct.
tell me the numbers. So you're at
We're at
725, give or take
about 800.
about 800,000. Okay.
Yeah. So
All right. So
800
800. Mm-hmm.
and we'll have raised rents. When I bought the property, the gross monthly rents were about 5 grand.
Mm-hmm.
And I think when all is said and done, if we can get all of them rented at, and remember that was only 6 out of 7 units rented and below market. So I think
Mm-hmm.
if we can rent all 7 units at market, we'll be closer to 7,500 or so.
Okay. So that's a good 50% bump up there in
Mm-hmm.
NOI. So what does that translate to an increase in value approximately?
So if you take, call it 50% expense ratio. So of that 2,500, take off half of that for expenses and management and whatever. So you're looking at a net operating income of about 5 grand
Mm-hmm.
divided by, let's call it a six cap or a seven cap. So whatever that math works out to.
Cool. I don't know what that math works out to. I don't have my calculator handy, but give
Yeah.
or take, I mean, you must have a ballpark figure what you think that's going to be worth at the end of the day,
Correct. Correct.
which
Yeah.
is
I mean, in theory, it should be about 900 grand to a million.
okay. So let's say 900 to be on the conservative side. So you're in for seven. Um, no, you said eight altogether, correct? By the
Eight
time
altogether.
eight
Yeah.
altogether. Okay. So then you refi. Yeah. So yeah, I'm not sure what the check will be. The net will be for you after the smoke clears because you put a fair chunk of money into it.
Right.
But yeah, you should be coming out ahead of the game there.
Right. And so
Yeah.
again, I'm curious to see what it actually looks like, and again to get an understanding and education in
Yeah, well, you know
multifamily
what?
burn.
Even if you're able to pull out what you put in, that's awesome, right?
Right.
That's Pretty good. Like if you're pulling out more than what you put in, that's a home run.
Right,
But if you're anywhere close, you're doing well.
right.
Yeah, good stuff. So moving ahead, once you've got that one figured out, what do you want to do? What else you want to do in 2025, Jeff?
Yeah, so the game plan is to take the refinance proceeds from the 7 unit along with the knowledge I've built. Um, I've also done, a number of other investments. So I have a couple of short-term rentals in the Smokies and going to be looking to sell those off.
Mm-hmm.
And so kind of combine the sale proceeds of the Smokies with the refinance proceeds from the 7 unit and go do something bigger. So going to be looking for maybe a 12 to 20 unit project
Nice.
in that same market, I think.
Very good. Yeah. So you're really kind of laser focusing in. Sounds like you've done a whole bunch of different stuff in the past, and now you just kind of want to dial it more in with multifamily in that market.
Yeah,
Yeah,
exactly.
that's smart. What are you not liking so much about short-term rentals these days?
It's a number of factors. So when I first got into short-term rentals, I hired a property manager, and property managers for short-term rentals are really expensive. They
Yeah.
take about 20 to 25% of your gross rents.
Yeah.
And so it just wasn't really penciling for me. So I thought, okay, I'll self-manage. And I will charge myself whatever I was paying them. And that sounds good in theory, but it's a lot of time. And this is entirely on me. I didn't put the systems in place well enough,
Okay.
such that it was mostly passive. I was thinking I was putting systems in place, and we had a virtual assistant who was helping us with the messaging and all this other stuff. But at the end of the day, it was a lot of pressure that I felt on me to manage these and make them perform well. And so at the end of the day, I was like, you know what? I got into this to spend more time with my family, and this is resulting in me spending a lot less time with my family and a
Yeah.
lot more stress and not enough money to compensate for any of those. So to hell with this.
So did you go back to the original property management in the meantime and just make it more passive, or are you still fooling around with VAs and whatnot?
Went back to a different property manager than
Okay.
when we first started. But yeah, it's very passive at this point, which is nice, but it's
Mhm.
not cash flowing nearly the amount that it needs to be. So I'll let someone else enjoy the benefits of short term rentals in the Smokies,
Yeah. Yeah. Somebody else who maybe wants to be more hands-on.
or
Yeah.
use it as a vacation rental.
Oh, there you
Because
go.
a same thing, and this is a repeat mistake that I've now learned from. I didn't go and see those ones in person.
So Jeff, we were talking a little bit before we started the show. You've started up your own podcast. Tell me a little bit about that.
Yeah, so the show is called Curiosity Class,
Hmm.
and the whole goal was kind of chatting like this. But I one of my favorite things in the world is getting coffee with people
Hmm.
and learning about their life and learning about their background and what they do. And it could be about anything that they're interested in. But if anyone's interested in teaching something, I love to have them on. And I wanted to call the show "Explain It to Me Like I'm a Third Grader." But
That's
when
a
I
good
looked on
title
my
too.
phone, yeah, on Spotify on my phone, the way that it wouldn't have fit well
Mm.
on a phone screen. So I thought, you know what's another word? And Chat GPT actually helped me come up with the name.
And remind me,
And
what's it called again?
Curiosity Class.
Yeah, well, that's nice and short and sweet. Yeah, for sure. Awesome.
You got the alliterative and all that stuff. So it's super fun, and I've gotten to spend a lot of time with chatting with people who are doing really interesting things.
Very cool. Speaking of interesting things, if people are interested in finding out more about you and connecting with you, where's the best place for them to go?
For sure. I don't have social media, so don't look for me there, but I'm very active on LinkedIn. So Jeff Album. I'm sure we'll have the spelling in the show notes, but the last name is ALB as in boy, AUM as in Mary. And you can find episodes of the podcast on my LinkedIn, follow us on Spotify, and yeah, reach out on LinkedIn if you have any questions or messages or want to get in touch or anything like that.
Fantastic, Jeff. Well, thanks for sharing some time with us today.
Thanks for having me, Dave. I appreciate it.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right. Take care, and we'll see you on the next interview.